How to get $1 million hard money loan. Want to scale your flips to $1 million deals? Here's how to get a hard money loan big enough to match your ambitions. Lenders don't just hand out seven-figure hard money loans unless you can prove that you can handle it. I'll show you what it takes to get approved for a high limit loan and what you'll need to do differently at that level. By the end of this video, you're going to know how to position yourself for larger hard money loans and the steps to build lender confidence and trust at these higher price points. Okay, so you want to take out $1 million hard money loan. Number one, the deal needs to make sense. No matter what the numbers are, they still are just numbers. Will hard money lenders loan $1 million? Of course. But they have to know they are secure in the deal. So number one, you got to make sure that you buy the house right. If you followed our channel for any length of time, you know that you have to buy the house right to make a significant profit. So a hard money lender wants to know that you bought this deal deep enough where you have enough skin in the game and enough money and potential profit that their investment is well protected. The deeper you buy a house at this level, the more comfortable they're going to be loaning you the money. Now, this typically won't be your first loan or your first jump into flipping. Although if you live in Southern California, Denver, Colorado, Miami, Florida, any of these really high-priced markets, it's possible this might be your first flip. I wouldn't recommend it for your own sanity, but if you want to, hey, go for it. If the numbers make sense, they make sense. The lender's going to want to make sure that you have liquidity. They want to make sure that if something goes south, that you don't have $10 left in the bank to cover it. Because if you're borrowing that much money, then typically it's a bigger home, and bigger homes require bigger investments for renovations, and things just cost more on a house like that. So they want to make sure that your business is not just running on a razor's edge. So make sure you have liquidity that you can show them. Each lender has a different requirement for how much they'll loan on a property. They base their overall calculation on the ARV, or the after repair value of the home. Typically, the loan can't exceed 65% of the ARV. Now, it could be more, it could be less, just depends on the lender, but 65% of the loan. So for instance, if you wanted to borrow $1 million, they have to know that house is worth $1.54 million, the ARV, when you're done. That way they have loaned a maximum of 65% of the ARV, and that's where they're going to feel the most secure on a loan of that magnitude. Now, I want you to be careful of the payment amount on a loan that big. Don't forget, you have to make interest payments to a hard money lender. If you were to borrow $200,000 at 12%, your monthly interest payment would be about $2,000 a month. You borrow $1 million, that's $10,000 a month. You have to make sure you have that liquidity and cash flow to cover that large of a payment. It's not just about the profit on the deal, it's about how much cash you have to cash flow it to get to the profit on the deal. When you show up to borrow money from a hard money lender, especially $1 million, you have to look like a professional. If you show up looking like a punk and you just kind of act like you should get the loan, you're not going to get a loan that big. So I want to make sure you look like a professional, and here's how you do it. Make sure you have all your financial records in place. Make sure that you know exactly where your bank accounts are, what your daily average cash balances are, what all of your assets are worth. You're going to have a PFS, or a professional financial statement put together, or a personal financial statement put together. Make sure you have all that ready to go when they ask you questions. You have to know all about that property. I want you to show up with pictures of the property. I want you to show up with the scope of work for the property, what you're going to do, what your numbers look like, and what a plan B looks like. Many times investors want to know, what is the plan B if you don't sell it for this much money? What will you do? You should have a plan B there so they feel secure knowing that they're going to get their money back on that deal. If you know your contractor's name and their license number, I would include that in your packet as well. Make sure they know that you've put together a professional team and you mean business. Remember, private money lenders usually want you to have some skin in the game. Now look, I still highly recommend that you use a private lender for the gap funding, or the funding that they don't cover, so you can still be 100% financed even on $1 million deal. But you may have to come up with other ways to get this done if you don't have that much cash. You might think about taking on a partner or a co-signer to get this deal done. Because at the end of the day, if you can make a $300,000 or $400,000 profit on one deal, it's worth it to split some of that up with some other people, isn't it? Now, if you go in for $1 million loan for your very first deal and you've never flipped a house, you probably won't get that unless you have a very, very strong co-signer, or you have tremendous liquidity and they say, well, if they default, We can totally get our money back because we have this other asset over here we could take if we have to. But if it's your very first loan, you may not get it. My recommendation is build up your credibility, build up your experience, and build up your tolerance and risk tolerance and your professionalism, your outlook, your whole business portfolio and your whole business persona, so that when you show up next time and you have the experience, you have a much greater chance of getting a loan that big. Hard money lenders and any lenders are the key to our business. Without having cash flow in our business to buy houses and cover renovations and cover day-to-day costs, we are literally out of business. So treat those relationships like gold. They are the most important thing in your real estate investing business. Big loans only make sense for the right deals. And the only way to know the right deal is to know what you're buying. I'm going to encourage you, if you want to be in the $1 million player or any level, you have to know what your buy box is. If you say, Glenn, what is your buy box? I've put together a video that explains your buy box. It's the number one thing that'll make you successful as a real estate investor, because once you know the property, you will find the money for your deals. Click on the link in my description below here. Go check out the video on how to define your buy box, how to buy the best property for you to make the most amount of money in the shortest amount of time. It's my gift to you. Go check it out.